The Nigerian equities market sustained the positive momentum driven by investor interest in high-cap stocks amid sell pressure in banking and consumer goods. Azeezat Awonuga, Securities Analyst at Parthian Securities, joins us now for an update on market activity. Azeezat, it's a pleasure to have you on the program. So I think so far so good in terms of how the market has started this year, but a lot of people have pointed to the elections as something that potentially will dampen sentiment. Now we're just a few days to those polls. What can we anticipate about the next few trading days?
Okay, so in the next few trading days, we expect to see a bit of mixed sentiment as we've seen in the past few days. So normally when it's close to election, what we expect to see are negative sentiments. But interestingly enough, this hasn't really played out as such, which is quite good. So we've seen marginal positive sentiments in the market. So let's say on Monday, markets closed about 0.07% positive. Tuesday 0.24 up, yesterday 0.02, and today it was up 0.03. I mean, these are marginal gains, but it kind of puts our mind to where the investors sentiments are. So with the elections, we might see it tilt a bit more to the negative.
Right. And clearly, investors are likely to invest more aggressively if there is value. So I just wanted to hear your thoughts on the gap between, should I say, the fundamental valuation of the market right now, and if potentially the outcome of the elections could be a catalyst for a strong rally. What are your thoughts on the market's valuation right now? Do you think it's rich, or do you think that there's still significant upside?
Okay, so for, right now we are looking to see the results from the banking sector. I mean, the banking sector controls about 60% of the market activities that go on. And we saw about last week where the earnings announcements really rallied up the market. Investors came in with more capital because, as you said, the fundamentals were looking quite good on a general scale. So by the end of the month, towards early next month, we expect to see the banking results out, and for the fact that they are largely capitalized and also move the market in which direction it might go. So if the results come out good and positive, we might see investors actually see value and plug in capital into the equities market. But if not, we might tend to see investors take their capital out. So it's just a game of tipping the scale, right? So the banking stocks right now are the major determinant in terms of fundamentals as to how the market would move in the next couple of weeks.
And I imagine one of the attractions to the banking stocks will be dividend yield. And
yes,
but then I think that the fixed income markets as an alternative will also have a bearing on what dividend yield is attractive enough. And given where the fixed income market is at now in terms of yields, do you think that there is significant upside or just maybe moderate upside for those who are looking to invest for dividends?
I think there actually is significant upside. Now, I don't know about the entry point, but then, I mean, investors who came in as late last year, long-term investors, would actually see good gains in terms of capital appreciation and a plus also on the dividend side of things. Because fixed income right now, as you said, the yields are not the most attractive. So we might see investors wait to play for the dividends.
All right, let's leave it
So
there.
yeah, I think it might be a driver.